Okay, so good afternoon. It is now 12 o'clock. So thanks everyone for joining. Yes, I'm Victor. I'm a financial wellbeing consultant at HSBC. So I've been working for the bank now for about 10 years. So I've got, wealth of experience in the finance sector. Today we are going to be diving into the topic of credit scoring, really important topic within our financial journey. So whether you're just starting out or have been managing credit for years, understanding how credit scores work, they can definitely help you make more informed decisions that's going to benefit your financial future. Okay, so this is one of our bite-sized topics, and it's going to last roughly between 20 to 30 minutes. As Darnell mentioned, you've got the chat function or Q&A function. If you do have any questions, please do not be afraid to ask. Just type it in, and then I'll try my best to answer them for you. Okay, so we're going to take a closer look at what credit scores are. We're going to have a look at what influences them, and also some strategies that you can use to build and to protect your score. All right, and at the end, I'm going to show you a QR code to book in a financial health check if there's anything from today's call that you would like to discuss with me or my colleagues further. Okay, so let's get started. So what is a credit score? It asks at the top. So it's also known as a credit rating. Basically, it's a number that reflects the likelihood of you being able to pay any credit back. Okay, so lenders like banks or credit card companies, they're going to take a look at your credit history when they are calculating your credit score, which will show them the level of risk in lending to you. Okay, so it's a measure of credit worthiness in the eyes of the banks, building societies. You can actually get a higher credit score by showing that you have a history of paying off debts in full and paying them on time. And you must also show that you have taken out some sort of credit. Okay, the higher the score, the better. All right, and in the UK, there are three main types of credit reference agencies. So we've got them on the screen: Experian, Equifax, and TransUnion. And even small errors on your file can cause problems. So it is important to check your score and also to check your credit report. Okay, so some lenders will report to all three of these agencies, but others may only report to one or two, or maybe even none of these, but all depending on the type of credit that you're going for. But because of this, when you check with each of these credit reference agencies, they may hold slightly different bits of information. But if you are doing a specific application for a specific company, and you know which one of these credit reference agencies that it uses, then obviously a priority would be to check the ones that they use. Okay, but as a general housekeeping rule, we would suggest that you check all three credit reference reports at least once a year, because they are going to have a huge impact on you later on. Okay, so also the importance of it, a good credit score can unlock better interest rates for you. They may even grant you approval for certain larger loans that you're looking for, mortgages, personal loans, and even save you money in the long run. Okay, so they do play a vital role in many people's financial lives. So you should know what your credit score is, and if there are any discrepancies that may affect you later on. You can also check your credit score for free at any time. It is important to note that even if you did have a good credit score though, it still doesn't offer any guarantees that you are going to be approved for the lending that you're going for. Okay, because these financial institutions, whether it's HSBC or another bank or so, they're going to take a subjective view of your credit worthiness, and they ultimately decide on the final outcome. Okay, so in terms of the credit report breakdown, so what is appearing on your credit report? Well, firstly, when you apply for a type of lending, whether that's a credit card, mobile phone contract, you might be applying for a mortgage or an overdraft, lenders may take a look at your credit history, including how much credit you've been given in the past and how well you've managed all of your repayments. Okay, so based on all of this information asked during your application, they are going to decide whether or not you are likely to repay for the lending in the future. So now in terms of what appears on your credit report, so this would include things like your financial associates. Okay, so as it says, if you have a financial associate, for example, someone you've taken out a joint mortgage with, lenders could take their financial behavior into account when you apply for a new credit. Okay, so be careful. Sometimes it is an uncomfortable conversation to have. You know, what is your credit score? You asking that type of question to your partner, but it is really important, especially if you are making lifelong commitments with them, such as taking out a joint mortgage. Okay, so also public records, such as CCJs, county court judgments, bankruptcies, or insolvencies. These are definitely going to appear on your credit report. Also, your financial credit agreements, so any loans, credit cards, mortgages, and overdrafts, which includes any missed or late payments, and of course, your address details. So for example, any electoral roll information for your current address, plus any previous addresses as well. Now, in terms of data that does not appear on your credit report, this would be your employment history, savings accounts, criminal records, medical, ethnicity, and religion. Okay, so lenders, they are going to use the information on your credit report to help them assess your financial behavior. Okay, so using their own unique criteria, they are going to review this data along with any other information that you do provide, such as your job and salary, and then decide if you are a good candidate for this credit that you are looking for. So typically, they are looking to assess whether you are likely to repay the debts or not. Okay. Now, in terms of the impacts on your file, so in terms of the negative impacts on your credit history, so things like missing payments or making a payment late, that can affect you. Maybe you have high levels of existing debts already. Obviously, the county court judgments, which we've mentioned, you know, maybe you haven't paid a bill. You know, this is going to have a serious impact on your credit score. And as I said, these CCJs can stay on your file for up to 6 years. Also, things that would apply or things that may affect you negatively would be applying for lots of credit in a short space of time. Okay, so it's always best to stagger applications. And it happened to me, you know, probably about 5 or 6 years ago. I moved into a new flat, and you know, my credit was always good, to be honest with you. So I don't know, maybe I was going to say arrogance, but it wasn't arrogance. It was just more so a lack of information. So basically, I applied for a new sofa on one day, got it all fine. The very next day, I applied for a washing machine via credit. The very next day, and that washing machine application was unsuccessful, and it was simply because I applied for these credits in a short space of time. So always best to stagger your applications. If you just want to compare rates when looking for a mortgage, for example, best to find out whether the lender can register a soft quotation search on your credit report instead of the hard credit search. So if you was on the call yesterday, you would have heard me say this. Okay, always ask them for a quotation search, because worst case scenario, if they say it's going to be an unsuccessful application, it's not going to affect your credit rating negatively because it was only a soft search that was conducted. Other things that may affect you would be moving home a lot. So lenders feel more comfortable if they see evidence that you have lived at one address for a period of time, typically for about 3 years or so. And as I mentioned in the previous slide as well, you know, financial associates. So being tied into, you know, a joint form of credit, bank accounts, loans, or mortgages with somebody who has a poor credit history may affect your ability to gain credit in the future. Okay, so in terms of how poor credits may affect you, you know, the obvious thing to say is that you may be refused credit. Okay, companies, they may feel nervous about lending you more if you are already overstretched. It can also affect the rate of interest that the lender charges, you know, for both new and existing borrowing. And lenders, you know, a lender doesn't have to give you the interest rate that they are advertising as well. So I said I've been in the bank 10 years. You know, I used to work in the branch network, and, you know, sometimes I would get customers that said, you know, I've seen HSBC promoting a personal loan as low as 3.7%. They've come in thinking that's the rate they're going to get, but once we've conducted that credit search, we've taken everything into consideration. They may have been offered a 10.9% interest rate. Okay, so, and also, lenders may offer you a smaller credit than you wanted. So maybe you've applied for a loan of 15K, but they've only offered you £10,000, for example. Okay, so this is how a poor credit history may affect you. Now, it's not uncommon for mistakes to happen in your credit report. This is another reason why it's important to check your file, from time to time, at least as a bare minimum once a year. Maybe you've been a victim of fraud. Maybe yesterday you checked your credit score was as high as 999, but today you've checked it and suddenly it's gone down to 500, even though you've paid all of your bills in full and on time. It may have been that you've been a victim of fraud. Okay, so if something like that happens, you can fill out something called a notice of correction. Okay, so it's basically a short statement that you can use to avoid further information to an entry on your credit report. So for example, you could use it to explain why you fell behind with repayments on a particular loan or credit agreement. And any lender checking your report will see the statement that you've made and take it into account when assessing your credit worthiness. Okay, so it can be very, very useful if you have been a victim of fraud, or maybe you've missed regular payments due to some unusual circumstances, such as maybe the loss of a job, or maybe a relationship breakdown, or maybe you've had to stop work because you've had some ill health. Okay, so although there are no guarantees, but it will still be provided to any lender, when they are checking your report in the future. Okay, so if you are going through any of these things, or it does happen in the future, please remember to fill in a notice of correction. Okay, so when you fill this in, the credit reference agency, whether it's Experian or Equifax, they will have 28 days to respond to any claims that you have made. All right, so let's have a look at another case study. We did one yesterday. I do love a good case study. So we've got two customers here, right? So two individuals, they are both looking to take out a personal loan of £10,000. Let's just say they want to buy a new car. All right, so £10,000 personal loan they're looking for. So we have customer A and we have customer B. All right, so customer A, she has a history of borrowing in the past. Okay, she's always repaid on time. She's never missed any payments whatsoever. Okay, she also has a credit card which she uses frequently, but again, she ensures that the balance is paid off in full every single month. She also has some savings, but she prefers not to use it. And all of her accounts have been well maintained, and they are in good shape. All right, so now with customer B, okay, so he, on the other hand, he's never borrowed before whatsoever, never borrowed anything, but at the same time, he's never been in debt either. Okay, again, he has savings, but he prefers not to use it as well. Similar with customer A, he's always had his accounts, he's been well maintained, never been any problems. But the main difference is that customer A has borrowed money before, but customer B has never borrowed money before. So a question for everyone, use the Q&A function, use the chat function. Which of the two is more likely to succeed in their loan application for this £10,000? Is it customer A or is it customer B? Please type in the chat function or Q&A, and then Stephen, if you don't mind reading out some of the answers that we get.
Sure. So far, we've got lots of responses, and it's customer A. Customer A, customer A, customer A.
Brilliant, brilliant. That is indeed the correct answer. Okay,
customer A.
Yeah, customer A. So, essentially, there is a behavioral pattern that the bank can assess and work with to determine her affordability. Okay, so as a result, it is customer A, that is likely to get the personal loan, at least at a competitive rate. However, it's not the end of the day for customer B. He is going to face some challenges. So the lending may be provided at a higher rate compared to what customer A is going to get. The bank may not even offer him the full amount. So instead of getting the £10,000, he may only get about maybe £6,000 or £7,000. Or worst case scenario, the application may be declined and no further borrowing will be offered. And that will show up on his credit report. So his score will go down slightly. Okay, so that is, as we said, I think it was Darnell that mentioned it at the start of the call. It's all about how you use it. There is good debts as long as you are managing your bills correctly. So customer A has shown that she has taken out a credit card, but she maintains paying it off in full every single month. So some people, for example, they might have a £5,000 credit limit on their credit cards, but they may only use it for small purchases. Maybe is £50 a month on their petrol, or maybe £100 a week on their shopping, their grocery shopping, whatever the case may be. Just borrowing as much as just being able to borrow as much as you can afford to pay back, during the deadline date. So usually the bank or the lender will give you a deadline as to the date that you need to pay off your credit card or personal loan, making sure you have the money in your bank accounts to be able to complete this purchase. And if you are paying your credit cards in full and on time, you are going to build your credit. Your credit score is going to go up in the long run. Okay, so that brings me on to the slide here. So building and protecting your credit score is very key to long-term financial health. Okay, so as you can see on the screen, there are various methods in which you can do this. Okay, so the first one we have is credit mix. Okay, so people with top credit scores, they often carry a diverse portfolio of credit accounts. So this might include a car loan, credit cards, overdrafts, mortgages, or other forms of credit products. And the credit scoring models consider the types of accounts and how many of each you have as an indication of how well you manage a wide range of credit products. On the right hand side, register to vote on the electoral roll. So if you are not already on the electoral register, it is much harder to get accepted for credit. So really important to sign up immediately if you haven't already. Don't wait for the annual reminder. You can make an application at any time via the government website, so gov.uk. Just simply follow the instructions online. It is going to ask you a series of questions just to identify you and the local electoral borough that you do need to register with. So make sure you know your national insurance number as well, because you are going to need to have this on hand. And as we mentioned, your financial associates. So be careful who you are linked with financially, okay? Because being financially associated with someone with a poor credit score, it won't necessarily affect your credit score. It's not going to bring your credit score down, but it could affect your ability to gain credit in the future. Okay, so even if you have a financial association on your report, your score is calculated using only information about how you individually use your credit. So if you are linked to someone with a low credit score, it's not going to bring yours down. I just want to clarify that. Okay, so they can affect how you are seen by lenders though. So when you are applying for credit, a lender may choose to investigate the credit history of anyone that is named on your report, which may influence your ability to borrow, but not going to bring your credit score down. Also have evidence of stability. So again, for example, you've lived at the same address, worked for the same company, and had the same bank account for a long period of time. Lenders feel more comfortable with people who have shown evidence of stability. Know what to do if you are a victim of fraud. So if you've been a victim of ID fraud, then it's important to see the full picture. This means getting hold of your credit report, Experian, Equifax, TransUnion. Once you have this, you can see if there are new searches or accounts that you did not apply for, and you can then contact the lenders directly. You can even pay their identity protection service, which they are going to do on your behalf. And you can also report your case to Action Fraud. So this is the UK's National Fraud and Internet Crime Reporting Centre. They are going to advise you on the steps that you need to take and any other organisations that you need to contact. And then check your credit file before any major applications, or at least as a bare minimum once a year. But definitely before you make any applications, personal loans, credit cards, mortgage. You may, as I said, you may have checked your credit scores in the past and it's always been healthy. But, as I said, you may have been a victim of fraud, which you wasn't aware of. And that could drastically bring your score down, and it could have a major impact on the application that you're going for. Okay, so where possible, have a look at your credit score. If there is any errors, contact the credit reference agencies, do the notice of correction. And if you have been a victim of fraud, then chances are that they are going to correct any errors that have been on your file, and then they are going to bring your credit score back to where it should be. And then another thing you can use, so there is an app called Lockbox. Don't know if anybody saw on the first slide when I showed you the 3 different credit reference agencies, the source came from Lockbox. So that is an app you can use to build your credit score as well. And then there is also another app called Credit Ladder, or website called Credit Ladder. Basically, you can add your rent payments onto this website, and that can help to boost your credit score as well. Now, credit scoring or building your credit score can take time. We're not saying you're going to go from a score of 600 all the way to 999 in one day. It does take time. Your score may only be boosted by 3 points every single month, but just making sure you are taking the right steps to do so, paying your bills on time and in full. If you have an overdraft, if you have a credit card, making sure they are always in positive, making sure they are paid for every single month. All right, so that pretty much brings us to the end. So, in conclusion, understanding your credit score is essential for making informed financial decisions. Okay, so by managing your payment history, keeping your credit utilization low as well, monitoring your credit report, you can build a very healthy credit score that will open the doors and save you money over time. So having a good credit score is definitely a valuable tool, so really important to treat it with care, and it is going to work for you. Okay, so what you can now see on the screen is information to book in a financial health check. So, if anybody wants to speak to me on a one-to-one basis, please scan that QR code you can see on the screen. So not only can we help you with credit scoring, we can help you with cost of living support, right through to protection. And again, it's open to everybody, regardless of where you bank, and it's completely free of charge. So there's no cost to any of this. All right, so I will pause there and back over to, Stephen. If we did have any questions, let's go through them. I'll try my best to answer them.
Sure, yeah, thanks for that, Victor. Yeah, that was quite useful. We have 4 questions, and the first question says, why are there different ratings for each credit score company in terms of poor to excellent?
Yeah, that one. I don't know why there's different scores, but they are pretty much the same. So, for example, if you are on excellent for Experian, for example, you are going to be excellent for Equifax. I don't quite know why the scores are different, but they are still the same categories, from very poor all the way to excellent. So don't pay too much particular attention onto the numbers, just as long as you are in the right categories. You want to be aiming for at least good upwards. As I said, it does take a bit of time to reach the targets that you're looking for, but just focus on being on the right categories.
Okay, cool. Thank you for that. I was thinking, I don't use any of those free companies that you used. I use ClearScore. Should I actually check on those companies, even though I do quite often check my credit score regularly, but on with a different, provider?
Yeah, so there are different providers like ClearScore. So ClearScore tends to use the same information that is on Experian. So it's pretty much the same thing. There are different apps, but as I said, if you are making applications for certain types of lending, so for example, if you're applying for lending with HSBC, you want to check the ones that the institution that you're going with uses. So we tend to use Experian and Equifax. So really important that you understand what your credit score is and what is on your report, with the credit reference agencies that the lending provider uses. Okay, but things like these apps, ClearScore, they are still good. It does show you, give you sort of a general breakdown as to what you have. Again, chances are if you are in the good category with ClearScore, you are going to be in the same category with Experian. But as I said, try to use the other ones as well. Experian is like the most popular one in the UK as well.
Great stuff. I've got another question, but is that Jacqueline? Jacqueline's got her hand up. Jacqueline, go ahead. I'll just let me unmute everyone, and then yeah, you can talk. Oh, you're unmuted, Jacqueline. Go ahead.
Am I?
Yes.
Yeah.
Can you hear me now?
Yes.
Yeah.
Can I hear you?
Yeah. It was just your point that you were making about what's it called, ClearScore, because I use them, and funnily enough, I was just looking at it earlier. They get their data. It says at the bottom of their page, the info. They get their data that they're showing you where you're at from Equifax.
Oh, Equifax, is it?
So
yeah.
it's
same.
it's one and the same,
So
really.
It's the same thing, yeah.
Okay, great stuff. Thank you for that, Jacqueline. So you mentioned something, Victor, about you checking what agency the lender you're looking to borrow from uses, but how would you actually know which one?
You can search it up. Yeah, simple Google search. They will tell you. Or
So
going
you just-
into, yeah. Or you can go into your local branch if you do have one next to you, just to confirm what they use, and they will tell you.
Okay. Great. We've got more questions. Courtesy of Nikki asked an interesting question. Where is it? Let's see. It says, how do you unlink with someone like an ex-husband? And you were talking about associates.
Oh,
how do you
financial
unlink from
associate.
an associate?
So if you have a joint bank account with them, you're financially associated. So you need to get that joint bank account closed, and then you will be unlinked. That's the only way it can be done. So any joint products you have with an ex-partner or someone, you have to end that relationship essentially. So let's say, for example, you have a joint bank account with this person, but you're let's say you're still in overdraft, you're on a negative balance. That overdraft needs to be paid for before you can close the bank account. It has to be paid for. You are both responsible for this account. Even if it was your ex-partner that has completely wiped the account, one of you or both of you or whoever, it needs to be fully paid off before you can close that account. Once that account has been closed, that is when you will no longer be financially linked.
Wow. So if they've sort of taken all the money, you're still responsible for closing.
You're both.
The bank won't make any. I mean, you can't go to the bank and say, look, this is what's happened. The evidence is clearly there. You still have to pay that off.
Regardless of the situation, the bank, you can tell them everything. The bank would listen to what you're saying. They'll take it on board, etc. But at the end of the day, you both would have signed a contract at the beginning of when you first took out this product. And you would have both seen, because the bank knows that these things can happen, right? But they've got this in their contracts that regardless of the situation, you're both responsible for this contract. Okay, so even if that happens, one of you has to pay it off. This is a dispute between the two of you. So the account needs to be paid off, the overdraft needs to be paid off. Once that is done, that is when you can close the account, and then you will no longer be financially linked.
Wow.
I know it can be, I've seen it in the past so many times, divorces, and it can be quite messy at times, but unfortunately, that is the only way that, the financial associate can be broken.
Wow. Okay. All right. We have another question. It says, how long does a late or missed payment have an impact on your credit score?
So we can stay on your file for 6 years. Okay, so I think we had a similar question on yesterday's call as well. So it can stay on your file for up to 6 years. However, let's say you've gone with a debt management company, a debt. So we spoke about Citizens Advice and Step Change on yesterday's call for anyone who was on that. If you have been struggling with debt, or you're struggling with missing payments, and you've tried everything, but the last thing you've had to do is get a debt payment plan. and let's say Step Change has helped you with this. They put in something in place to help you clear off this debt. Now, this is going to show on your file that you have taken a debt payment plan. That is going to stay on your file for up to 6 years. However, even after 6 years, and maybe you haven't been able to pay the full debt, it is going to be wiped away from your file after 6 years. Maybe not necessarily the debt, but the information that is shown on your credit file will be wiped away after 6 years. Okay, so 6 years is the maximum that is going to show on your report.
Okay. Is that just out of curiosity? Does that, and this might not even be true, but does it have something to do with after a certain number of years you can't chase a debt? Because I've heard that with I think social care, where if they haven't chased the debt after 7 years, they can't actually chase you for the debt again. Is that linked to it, or is it something completely different?
That one is something different. I will need to look into that one some more, and I'm not sure about that 100%. I'll look into that some more, and then in the follow-up email I'll send you, I'll clarify that last bit and send it to you. But yeah, in terms of the information on your credit report, that one is six years is the maximum. But that 6 years is a very long time. Just everyone think about how much your life has changed over the past 6 years, right? There's been a lot that's happened, and I'm sure in the next 6 years, your life is going to change some more. So that's why it's really important to try and stay on top of your finances. And as I said, if there is any errors on your file, get it rectified as soon as you can, so that your score will go back up. Because maybe some of you have worked very hard, you saved up a lot of money, you're looking to buy your first house. Maybe having a very bad credit score can definitely have an impact on you getting that mortgage. Even if you've got that money readily accessible for your deposit, your credit score can affect you.
Interesting. Yeah. Next question. Why do you get a higher interest rate for a lower credit rating when that ultimately means that you will likely be paying more?
Because so going back to the case study, so with customer A and customer B, right? So customer A had shown that she had borrowed money in the past. Okay, so there is evidence to suggest that she has borrowed money in the past and she's always paid it in full on time. So this is somebody that the banks can see that they can trust. There's evidence there. She's borrowed money, she's paid it in full. The bank can see that this is someone that we can trust. The other person, customer B, who has never borrowed money whatsoever, the bank has no information to suggest whether he is somebody that we can trust to always keep up with his payments in full and on time. So with that being said, they can take a look at his information, and maybe he's earning enough money and he's got some disposable income to be in a position where he can pay it off in full and on time. However, they have no proof, they have no evidence to suggest that he can do this. This is why they are going to give him a higher interest rate, okay? Because they haven't got any evidence to suggest he will do so in the past. Somebody that has shown history that they can pay it in full and on time, they are going to get a better rate. That's just how it is, because there's evidence to suggest that this person is trustworthy. Okay, although the bank is offering the other person a higher interest rate, it is a higher interest rate, but they're not gonna borrow them money. They're not gonna borrow them more money than they can afford to pay back, essentially. So as I said, like I said before, they were both looking for £10,000, but customer B may have only got £6,000 instead of that £10,000. Although it's a higher rate, it is a lower amount that they're being borrowed. So the bank isn't going to put them in an uncontrollable position where they're not able to pay it back. And also, let's say you've applied for a credit card, right? Maybe you've applied for a credit card of £5,000. You've never borrowed money before. This is the first application you've done. The bank may only offer you £3,000 during the first year. And once they've started seeing evidence that you're somebody that they can trust, then they will send you a letter to see if you're interested in increasing your limit from £3,000 to £5,000. So these are some of the things that they do. So it may be a higher rate to begin with, but they are gonna, just test the waters and see if you are somebody that they can trust in the future.
Actually, leading on that, Nikki's asked another question. It says, what do you recommend an 18-year-old does to get healthy credit? What are some good starting steps?
Okay, so good question. So firstly, I would say getting direct debits in your name. All right. So it could be something small. It could be like, for example, cars, right? Young people like cars, and oftentimes they may get their parents to sort out their insurance for them. Okay, so I'd recommend, where possible, it could be something simple like Netflix subscriptions. Just making sure you have some direct debits in your name. Having the money in your account for these direct debits to be paid for in full and on time. That would slowly build up your credit score. Slowly but surely your credit score will be going up. And then when you're in a position to do so, take out a credit card for small limit, £500, for example. Nothing too hefty, nothing too much that they can handle. Something small. And then, there might be, maybe they started work. I would always recommend only taking out a credit limit for nothing higher than what their income is. So if they're earning, let's say they're earning £1,200 a month, don't take nothing out. Don't take a credit limit beyond £1,000 or so. Okay, that way it can, be well controlled, well maintained, as long as they are making the right steps. But definitely having some direct debits in the name, that would be the first place to start.
Thank you. Yeah, that was a really good question. Another question we've got is with a notice of correction in the case of fraud, does it mean that the actual credit rating will not be corrected, just that lenders will see the statement and take that into consideration?
Okay, so if you've been a victim of fraud, for example, the credit reference agency is not going to know that you've been a victim of fraud. All they can see is that, so let's say, for example, you've applied for let's say, for example, you've paid all of your bills on time. However, you've received a letter from the bank saying that you owe £10,000 in a personal loan. All right, this is a bank that you've never dealt with before in the past. It means that somebody else has taken your personal information, they've applied for a loan, they've taken out the money, but no payments have been made. But because they've used your personal information, your name, date of birth, etc., the system believes it was you that has taken out this loan and not paid it back. So that is why it's up to you to fill out this notice of correction, okay? Because your credit score would have gone down automatically because it was your personal data that had been used. Once you have filled in this notice of correction, the credit reference agency is then going to investigate. As I said, they have 28 days to respond to your claim. Okay, so they are going to be investigating. They are going to see everything. Okay, they will see that, if it was fraud, they will see that fraud was done in your name. Then they are going to rectify what your credit score should have been. So if it went down to £500, then it will go back up to whatever the score was before. Okay, but it's up to you to make that step and fill out that notice of correction.
Hence why we need to be checking our credit scores.
Exactly. You can even set up the notifications. So ClearScore, for example, you can get email sent to you once a month. Just set up the notifications on your phone. It doesn't take long, and then you will know. You keep track of what your credit score looks like.
I mean, that's what I've got. But every month it just says your new report is here, and you just click on it, go through it. Takes about 10 minutes, and you're aware of what's happening. So, thank you for that. And
sometimes your score goes down, by the way. Just to add to that, so sometimes your score may go down. It's not the end of the world. So your score might be 600 this month, but the next month it might be 598. These things do happen. If it's gone down small, the following month it might go up by 4 points. These things happen. So when I'm saying, fraud might affect your score negatively, something like that will bring your score all the way down, from 900 all the way down to 500. So that's what I'm talking about. But little points from 600 to 598, the following month it might go up to 602. It's going to fluctuate from time to time, but that one there is normal. So don't worry if something like that happens.
Okay, cool. Thank you very much for that. That's all the questions in the chat and the Q&A. I wonder if anyone else wants to, ask a question directly or wants to make any contributions. Please do. D, go ahead, man.
Yeah, so sorry, just on the back of what Victor was saying, I just wanted to add to that. So previously I've had credit cards, and because of the fact I didn't really use them that much, I noticed that my credit score, my credit was getting reduced each month based on not using it. So I assume that that's to do with not actually using credit on a regular basis. So I just wanted to throw that in as well.
Yeah, that's a good point actually. So another thing is having like too much credit. I don't know too much, but having credit that you don't use, that can affect you as well. That can also affect you if you're looking for further lending. So let's say you've got a £10,000 limit on your credit card, but you're looking for a personal loan worth £20,000. They may not offer you that £20,000 loan. They may only offer you £10,000 or £15,000 because they can see that limit you've got on your credit card, which you don't touch. They're going to say, why don't you use that? Why don't you use a bit of that to get what you need, for example? So it can have an effect in terms of the lending that you're looking for. And yeah, as you said, it can bring your credit score down as well.
I thought, because just on that, I every now and again, you know, they'll write to you and they'll say, we're increasing your credit from blah 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 to blah blah blah. I always thought that was a good thing. So that could actually work against you if in future if you're looking to borrow.
Yeah. So just because they're sending you that letter, just you don't have to take it. You don't have to take it if you don't need it. They're just giving you the option, because as I said, unless they give you that option, let's say you just walked into the bank and asked them for an increase, chances are, well, you might get it, but there's a strong chance that you might not get it as well. But the fact that they're offering it to you suggests that you have a very good chance of getting this lending, this increase, okay? But if you don't need it, I don't recommend you take it, because your credit utilization, goes up. So only use the credit that you know you're going to need. Okay, obviously it's good to have it. Let's say you might have, maybe you only had £500 to begin with, but now it's gone up to £1,000. That's fine. And what I'm talking about is the really high credit limits of £10,000, for example. You might not need that much. So why have that much?
True. Yeah, we've got Patricia. Go ahead, Patricia.
Hi. I just wanted your advice. Do you suggest closing credit cards that you don't use? I've got credit cards that I don't use. Do you suggest I close those?
So how many credit cards? You have multiple, more than one?
More than one.
And you don't use any of them?
I've got more than 5, put it that way.
More than 5, yeah.
Yeah.
I would say close some of them.
Close some of them, yeah.
Definitely.
Okay.
Yeah, because that's going to work against you. So only use one, 2 maximum. It depends on how much you use it, to be honest with you. But if you know you're not using them that much, definitely close the ones that you don't need.
Okay. Thank you.
No problem. You're welcome.
Great. I think, Nikki, I hope that answered your question. We got another question from Denise. It says, so should you decrease the credit limit on your credit card if you don't need it?
Yeah. Well, it depends on how much you have, and it depends on your needs, what's coming up in the future. So you might not need it now, but do you think you're going to need it in the next year or so? It is better to have it than to not have it, but just depending on what your needs are. If you know you're never going to need that much, then reduce it to a point that is you feel like is within how much you spend or how much you're going to spend in the future. So again, I keep saying £10,000 because this is what I've seen a lot in the past. You've got a £10,000 limit, but on average, at most, you probably don't need nothing more than 2,000. But again, it just depends on everybody's individual needs.
So, assuming, let's say you decline the offer for increased credit, and let's say you need it in future, and you apply, will that work against you?
No, you can apply. So you don't. If you've declined it, it's not going to work against you. Okay. However, let's say you apply for an increased limit a year later, you might get it, but there's no guarantees. There's no guarantees of anything happening. I can't guarantee anything. However, as long as you've If they've offered you this increase, they've sent you the letter, it means you've been doing something right. It means you've been paying your bills on time. You've done something right. You've earned their trust. So as long as you've maintained their behaviors that, you know, pose them to send you the letter in the first place, then you are likely to be approved for that lending that you're looking for if you were to make the manual application yourself. Okay, so I wouldn't say it's going to work against you unless you change your behaviors and you start missing payments or you pay late.
Yeah. Darnell, you got your hand up.
Yeah, sorry. So what I wanted to ask Victor is, because obviously we've just had a month of reclaiming narratives, right? With our Black History Month theme. So one of the narratives that I've always heard is that if you want to build your credit score, you can do something like pay for your daily sort of expenses with your credit card, and then make sure that you either pay it off straight away or pay it off at the end of the month, and that can help you increase your credit score over time. Now it takes a lot of work, obviously, to remember every purchase that you paid and make sure that you're paying it off straight away. Is that worth its while doing something like that, or does it not make much of a difference?
So people do that. So I gave an example before. You know, people use it for petrol, people use it for their groceries. That's fine, but I would say be careful with that. Again, the word credit utilization, because you don't want to spend too much of your credit limit. So if you have a credit limit of £1,000, for example, I wouldn't suggest spending anything up, you know, like £900 or £950, because it shows that you're kind of reliant on debt. That's what it looks like.
Right. Your
credit utilization is high. Again, but if you have a £10,000 limit, but you spent up to £1,000, that's fine. There is a gap. I don't know, it's kind of catch-22, because like I said, you don't want to have too much of a high balance, but at the same time, you don't want to spend too much of your credit limit, because it can appear that you are reliant on debt. But yeah, if you're using it for daily expenses, for coffees and, you know, daily expenses, and you're not using too much of your credit utilization, as long as you are paying it in full during, you know, the deadline date, then that's fine. Your credit is going to go up, but you just have to be smart about the way you use it. But the main thing is to make sure the balance is paid in full. Okay?
Right.
As long as the balance is paid in full, your credit score is going to go up. So again, just spend what you know you can afford to repay back.
Yeah, thank you.
Yeah, Nikki just, I think, added to that and said she was told to use less than half the credit available to increase the credit rating.
There you go. So this is what I'm saying about the credit utilization. You don't want to spend too much of the limit that's available to you. Okay, so sorry, yeah. So although it is good to use your credit card, but again, don't become over reliant on credit. So still use the money that is available on your bank accounts. Create a budget. You know, if possible, maybe have 2 bank accounts. Your first account to cover, you know, your major bills, rent payments, utilities, etc. Use your secondary bank account for your personal expenses like shopping or whatever, eating out. And then, you know, being smart as to how you're going to use your credit, specifically to build your credit score. But don't become over reliant on your credit card.
Good. Amazing points. Thank you for that, Victor. We've got, again, once again, does anyone have any more questions for Victor or anything they want to share? No? Oh, great stuff. Victor, thank you so much for that. I learned, we've got
another sorry, comment. I joined really late, but it's just a quick one about clearing CCJs from credit scores. Was that covered? Was that
CCJs.
Out of scope?
Oh yeah,
briefly,
CCJs,
but what?
Yeah.
Go ahead.
The county court judgment. So yeah, that can stay on your file for up to 6 years. Okay,
so I heard that I was told that there are some law firms that can legally remove a CCJ if the whatever debt it was has been paid off in full, so that it doesn't.
From your file.
Yes,
okay.
So that it doesn't sit there for the full 6 years.
Okay, so we can say on your file for up to 6 years. Okay,
Mhm.
so it can possibly be, taken off. But again, if you said it's, if it goes to court, for example, maybe there's been a mistake on it. Or like I said, maybe you missed payments because you were taken off sick, or you lost your job, or you was going through some relationship breakdowns that caused you to miss payments. Then you can, get your lawyer involved, speak to the Citizens Advice Bureau, and then they can work on ways to potentially remove the CCJ from your file. Okay, but if there was no, what's the word? If there was no
Extenuating
extreme
circumstances.
circumstances, yeah. If there was nothing like that, and you simply just missed the payments because you didn't have the money available, then it's not likely that it's going to be removed from your file.
Thank you.
Yeah. Okay.
Thank you, Victor. That was a great, and thank you, everyone. That was a great session. I did learn quite a lot, and as Victor has got on the screen, if you want to talk more, book a health check, scan the QR code, and get in touch with his team. We will be having more. I think there's 2 more webinars, which Victor again will. It is you, Victor, isn't it? For both of them,
yeah. Savings and
Victor will be
investing.
back again tomorrow for the savings, and then on Friday for the investments one. So please attend that one. Come with your questions, and we can, and hopefully we can all increase and improve our financial literacy. We've got lots of, I know you can't see the chat, so I'm going to let you know we've got lots of thank yous to you, Victor. Very informative session, and people are getting lots out of this, so thank you for that. And I think I'll hand over to Darnell as the chair of the PN for the final words, and then we can carry on with our days.
Brilliant. Thank you, Steve, and thank you, Victor. That was really good, as I put in there, really, really informative. Lots of extra links and stuff that we can actually go, and that financial health check, which is actually no cost to anyone, is absolutely amazing. So I hope lots of people will scan that if needed. I mean, as Stephen has said, there's 2 more sessions this week, so do get along to those if you're able to. It's a lot of information over an hour, so it's really good for us to sort of attend those as well. But yeah, just to say thank you for everybody, and I hope you have a good rest of your day. And Victor, we hope to see you again this week.